You've just had your own numbers. You are, of course, a company that, what is it, about roughly 50% of the venture capital companies out there in the US, many VC firms, bank with you. You had a record year. Is that likely to continue?
Yeah, well, it's great to be here. Interesting week to be on Bloomberg, but we'll hopefully provide some
Kudos for sticking with us. We thank you.
Yeah, no problem. Some calmness to it, because I think it's important to think, at least the market that we're in, to think about this not on a daily basis, weekly basis, but to think about it longer term. So I'll describe that. But we had a great year last year. Last year was a record year in almost every category. We had almost 70% asset growth. Our net interest income was up incredible, and we had a great fourth quarter. And what was also positive is that we increased our guidance for 2022. And that's before there's any benefit of rates. So that's the good news. Clearly, the challenge is what you're seeing, we're all seeing right now, which is the tech correction that we're watching kind of on a daily basis.
From your perspective, did you see it coming? Did you feel that this is sort of where valuations had gone too far, too fast? There needed to be some sort of realignment, or is this taking you by surprise?
Yeah, I've been at SVB for 28 years, and I've seen a lot of different cycles. And what it always feels like there's the public markets tend to, I would say, overshoot the mark periodically, and then they undershoot the mark periodically. And it feels like that's where we were last year. Everything was priced to perfection. Everything was going well. Nothing could go wrong. And that's just not the world that we live in, especially with high growth companies. The fundamentals are still very, very, very strong with these companies. Clearly, some are being impacted negatively with the pandemic and supply chain, or with the pandemic hopefully being behind us in the not too distant future, some of the pandemic stocks correcting. But if you really look at the fundamentals of so many businesses, it's really just the valuation is coming down a little bit. And we also see that almost in every situation when rates start to pick up, you start to see the highest growth stocks tend to pull back. So I don't think we should be that surprised we're sitting here right now.
Talk to us about what the private markets are telling us right now, because with the public markets, as you say, sometimes the pendulum's swinging too far one direction or the other. You've got the Vision Fund CEO, of course, the 100 billion that they've been putting to work, saying that private markets are overvalued. You've had the Cathie Woods of this world saying she's never seen such a disconnect between private markets and public markets than there are at the moment. Is the private market getting the memo from the public market, and are we starting to see valuations come down there too, do you think?
Yeah, well, again, much different, private versus public markets, right? Public markets they're mark to market, every minute of every, trading day. So you see that impact, and you see the volatility, right? With private markets, the only time valuations change, for the most part, is when a new round of financing is raised, and that price is set when that money is raised. Don't have the day-to-day volatility. Last year was a record year for fundraising. It was a record year for money going into venture-backed companies, almost double what it was the prior year. And so our valuation's healthy, very high, priced to perfection, absolutely. But there's so many incredible companies in that portfolio. So do I see 2022 and see some valuations corrections with some of these companies? The answer is I do. But that's a healthy market. It's a healthy market in the public, to be honest, and it's a healthy market in the private. So that being said, what I've said for years is that you look out and you say, what I can promise is that the innovation economy is going to be up and to the right. It just may be a little bit of a zigzag on the way up. So we're still thinking not just this quarter, next quarter, not just the end of this year, next year, but really several years out. And that's why we continue to invest in this market across our entire platform.
Greg, of course, you are a commercial lender to a lot of these businesses. They've got the investment banking part. Will we see fewer companies wanting to go public if they've been so priced to perfection in the private markets? Will companies again start to stay private that bit longer, or will they do their fundraisings out of the public glare if you've got this sort of volatility upon us?
Yeah, so I'll answer that in two different ways. One is I'll talk about the market, then I'll talk about our business relative to public listing of tech stocks, capabilities that we brought on board. So last year was an incredible year. When you look at the number of SPACs and just new IPOs, it was a really prolific year. Do we expect the same thing in 22? The answer is no. We do think it's going to be softer. but there's still hundreds and hundreds of companies that are performing exceptionally well that, to be honest, should be and could be public companies. Whether they choose to go out this year, that's up to them. They got to make that decision. They're not going to be forced to, because a lot of those companies are cash rich and they can continue just to perform as private companies. So they're going to wait and see to what the market looks like. But there will be companies that will go public. Now for us, we've had a healthcare business in investment banking, equity capital markets, done extremely well the last couple of years. We've built onto that healthcare services and now technology. And so we're starting from a really small base. So we feel good about the upside for technology investment banking in this year because we're just building that capability. So some IPOs, but most of it's going to be around M&A, private M&A, sponsor buyouts, and those sort of things. So it's really, you have to understand kind of where things are coming from. But yeah, it's going to be a little bit softer than last year for sure.